So this problem has a few steps in it. Where would we start? The trade discount. So we have to first figure out how much money is going to go on the invoice to begin with. So we start out with the list price, and we work with the trade discount. So 412.18. What's that going to give us for trade discount? The 4 becomes what? 0.96 times the 12, 0.88, and the 8, 0.92. I can either multiply those together, or I can just take the 25,000 times all of them. Which gives us, oops, I got a 0 missing, $19,430.40, right? That's the amount that goes on the invoice. So, first question, how many of you got that for the invoiced amount? Okay. Would you see what you did? Okay.
Exactly what I thought I was supposed to do. I did the opposite.
Okay. You subtracted from 1 and then used that?
No, because I didn't use them all. I used the 4 first before.
Oh, gotcha. Yep, you got to use them all.
Yeah, and that's right.
Okay, so like I said, that notation appears in this problem 4 different spots, and it has 3 different meanings. Sure. So now that we know how much appears on the invoice, we can do timeline. Where does our timeline start? Well, we're not even told when the invoice originated, are we? So how do we know when the timeline starts? Okay. ROG, which means receipt of goods. So we don't care when the invoice was originated. All we care about is when it was delivered, and that was 5/3. So our timeline starts on May 3rd. What's going to be the end of the discount period? 13th, 10 days. Good. What will be the end of the credit period? June 2nd, 30 days, right? Remember, you do have that table in the book you can use if you need to for figuring out the days. Payment is made on May 9th, which is in here. They get the discount. How much of a discount? 1%. So it applies to their payment. You remember how to do the discount on a partial payment, right? 1 minus, so it's going to be 0.99. So do we do 9,000 divided by 0.99? Okay. First thing that is always paid is freight. There is never a discount on freight. So the first thing that happens to that $9,000 payment is that we must subtract the $800 of freight. The freight is going to get paid. So the freight is now paid off. $8,200 now gets applied to the invoice. That is going to be adjusted by the discount. And how do we adjust that for the discount? That gets divided by the complement, or 0.99, which is going to be $8,282.83, correct? Are we good so far? So now we're going to take the invoiced amount, $19,430.40. And from that, we're going to subtract $8,282.83. $11,147.57 is due on June 2nd. Very good. Questions? Anybody want to see one more of those? Yeah? Okay. PLM Corp purchases $7,000 of merchandise on, bless you, September 27th. Their trade discount is $7.11. The seller prepaid $500 in freight. Terms are 310 EOM on November 8th. PLM pays $4,000. Find the balance and date due. I'll give you a couple minutes. Where do we start? So 7,000 times, what's my first one? 0.93 times 0.89. Should give us 57.93.9. So that's what goes on our invoice. What do we do from there? Look at our timeline. When's our timeline start? October 31st. The end of the month, but it's after the 20, it's the 26th thereafter. So it goes to the end of the next month. So they'd have till November 10th here to get a 3% discount, it's listed as. Then, of course, November 30th is when it would be due. It was only 30, but it doesn't matter. We've just said it's the 30th of the next month, no matter what, no matter how many days there are. So anyway, now we've got to make a partial payment. What's the first thing we're going to do with our $4,000? Subtract the $500 in freight. So the freight is paid off and the $3,500 gets applied towards the invoice. What's going to happen to that? Divided by 0.97. There's a 3% discount. So 3608.25 is the amount credited to the account, to the invoice. So that means we're going to take $57.93.90 minus 3608.25 and get 21.85.65. Anybody get that? Good deal. Okay, so that's what we finished up. That was the kind of everything all wrapped into one from last week. Last week, what we were talking about was from a manufacturer or distributor to the retailer. This week, we're going to focus on the next stage, which is from the retailer to the customer. So obviously, there's going to be, the retailer has to purchase the merchandise they're going to sell. So that what they pay coming in is considered the cost of that merchandise. The price that they're going to pass along to the customer is considered the selling price. Obviously, they can't be equal, otherwise the retailer is not going to get any money out of it. They have to have some sort of a increase in that price, and that increase is called the markup. And that's simply the amount added to a price for two reasons. To cover expenses and to make a profit. Now, if this were the accounting class or accounting side of it, we'd cut expenses into two categories. Your overhead, like your rent, your electricity and stuff, expenses you're going to have no matter what. And then variable expenses, like your wages for your employees and stuff like that. We're not going to get that technical in here. We're just going to say expenses, period. So we're going to focus on how that markup is figured. Markup, the formula that governs all of this is going to be cost plus our markup equals our selling price. And that formula is going to do 90% of what we're going to do in this section of the unit. This little table might look familiar to you from week 3 of the class when we talked about percent increases and decreases. Because that's what a markup is. It is just a percent increase. So in all of these problems we're going to do, each of these items, cost, markup, and selling price, are going to be described by a percent, and they're going to be described by a dollar amount. And filling in this table is the easiest way I know of to keep track of the calculations and to make the appropriate calculations. There are two types of markup. The first one is markup based on cost. That is the one that makes the most common sense. What most people would think of when they think of markup is you find a percentage of the cost and you add it on. That's based on cost. Second is based on selling price, which to an outsider doesn't make a whole lot of sense. Why would you have your markup as a percentage of your end result? But in the bookkeeping side of things, it makes a lot of sense. It's an easier way to keep track of certain things. So not only are we going to have to be able to calculate markup in both ways, in some cases we're going to have to be able to translate from one to the other. So we're going to start out with markup based on cost. The key term here is based. When we're talking about percents, the term base has a very specific meaning. Now, if you're looking about a generic percent problem, they've got the portion, the base, and the rate. The base is the number that is associated with the full amount, or 100%. So that word base implies 100%. So this is being based on cost, which implies the 100% goes with the cost. So we're going to look at several situations here. You're going to purchase items that cost $250. I'm going to abbreviate markup with just MU. Your markup is 30% on cost. Find the selling price. This one is pretty straightforward. If you wanted to, you could find 30% of 250, add it on, get your selling price. We are going to go ahead and do our little chart. Cost plus markup equals, from now on I'm going to abbreviate selling price as just SP. What do we know in the chart here? Well, 250 goes where? Cost and dollar cost, right? So it goes over here. 30 goes percent side for the markup. It looks like that's all we know, but when we have percents, there's always something else we know, which is 100, which is going to go where? Cost. How do we know the 100 goes with the cost? Because it's based on cost. That tells us the 100% goes with cost. Which implies at some point in the future, the 100% is going to go somewhere else. So I realize right now, every problem we've used, the 100% goes in that top slot. And we are going to see somewhere it goes somewhere else. So keep that in mind. So something we can calculate very quickly then is this number, which will be 130. It's cost plus markup, right? So 100 plus 30 is 130. Are we looking for this number or this number? Markup or selling price? We're looking for selling price. Find the selling price. So we're looking for this one, which means we don't. How do we know what rows we need? Well, we need the row that has what we're looking for. So we need this row. Then we have to have at least one row where we know both numbers. In that case, it's the top row up here. So that tells us we don't need the middle row. I'm going to cross multiply and divide right within the chart. 130 times 250 divided by 100 is 325. So our selling price is $325. Now again, if you had just found 30% of 250, it would be 75 bucks added on. You would have got to that. By 1.3, yes. Yeah. And that's actually what I would do once I got to this point, is I would multiply by 1.3 instead of bothering by dividing by 100. So let's say we have an item that costs $80. Your markup is 20% on cost. Find the dollar amount of the markup. So our table is still the same. Cost plus markup equals selling price. What do we know? 80 goes where? Cost is $80. What else do we know? 100% goes in for cost. Yep. 20% goes for markup. And we can very quickly find this one's going to be 120. What are we looking for this time? For the dollar amount of the markup. So that's the one we are looking for, so we have to have that row. The cost has both numbers, so we need to use that row. Selling price is the one we don't need this time. So cross multiply and divide. 20 times 80 divided by 100, or 0.2 times 80, either way, is going to give us $16. That's the amount of the markup. So the dollar amount of the markup is $16. So if you purchase an item that costs $92, selling price is $120. Find the dollar markup. How many of you are making the table right now? Okay. You don't necessarily have to. I'm going to do it anyway. Everything we're given here, $92 cost, $120 selling price. The dollar amount of the markup is just going to be found by subtracting 120 minus 92. We're not even told whether it's markup on cost or selling price. It doesn't matter. The dollar amount is just the difference between the cost and the selling price. So in this one, we're given that the cost is $120. The selling price is $160, $168. We're asked to find the percent markup on cost. So for this one, once again, we're given the dollar cost and the dollar selling price. But we are asked to find the percent markup based on cost, which tells us the 100% does go for the cost. Do we have what we need to know to find this right now? We do. We just need to figure out a piece that's missing. We know this amount. How do we find that amount? Subtract. 168 minus 120 tells us this has to be 48, because 120 plus 48 has to equal 168. Cost plus markup always has to equal selling price, period. So now we have that number here. We always have to have, if this is what we're looking for, we always have to have the number on the other side. We have both numbers for the cost, so I don't need the selling price in this one. So cross multiply and divide. 100 times 48 divided by 120 gives us 40%. 48. Okay, you could do 168 divided by 120 and give 140 and then just subtract off the 100%. That works if you see that coming. Now there are going to be cases where you got to be very careful with that. It will work if you use it correctly. Well, it will always work if you use it correctly. There are times where you have to subtract from the 100 or add from 100, depending on whether it's based on cost or selling price. Yeah, but it's going to take me a while to get to it. Okay, so hang in there. It's one of those where I can't jump to it right now because we're not close enough to it to jump to it. If it were based on selling price, the 100% goes here. So you got to be careful to know whether you're adding it or subtracting it is the big thing. Okay, let's take a look at another example here. I'm going to tell you our dollar markup is $32. Our percent markup is 80% on cost. I'm going to ask you to find the cost. So what do I know? Well, I know the $32 is dollar side of markup. What else do I know? 80% goes markup percent. What else do I know? 100% goes on cost. I could find this to be 180, but here's a problem where I don't even need that. What am I asked to find here? I'm asked to find the dollar amount of the cost. I'm looking for this. So I'm not going to need the selling price at all. I can do 100 times 32 divided by 80, which gives us $40 in that cost. So my dollar markup is $56. My percent markup, 70% on cost. I'm going to ask you to find selling price. Try that one in your notes quick. See what you come up with. So we have the $56 markup, 70%, and of course the 100%. This time we are asked to find the selling price, which means I have to know this number. What's that number going to be? 170. So now this time, what line is it that I don't need to use? Cost. So cross multiply and divide. 170 times 56 divided by 70 is 136. So our selling price is $136. What do you think so far? Doing okay? So let's say we are given our markup is 20% on cost. Our selling price is $492. We're asked to find the dollar amount of the markup. I want you to try that one in your notes quick. So we've got the 20% markup. It's on cost. That tells us 100% goes for the cost. We have the selling price of $492. What are we asked to find? Dollar markup. So we got to use the markup rule. So we either need to find out what the dollar cost is. That's not so easy to do because we don't have the other two numbers. or we've got to find out the dollar selling price or the percent selling price, which we can do because we have the other two numbers in that column. How do we find this? 100 plus 20 is 120. So it's the cost row that we're not going to use. 20 times 492 divided by 120 is, what is it? 98.4? What's that? So I thought I made it come out perfect. Yep, it is 82. $82 is our dollar markup. Okay, no problem. It happens. You found 20% of the 492?
No, I did like 498 or something.
Oh, sure. Okay, yep. That happens. So now the other type of markup is markup based on selling price. Once again, the base is the key word, which implies that 100% goes with the selling price. Well, so far, every time we've set up one of these tables, that 100 has to go in the top slot of that percent column. Here, it's not going to do that anymore. So let's say that we have a 30% markup on selling price. The selling price is $80. Find the dollar amount of the markup. Well, the formula is still the same. Cost plus markup still equals selling price. We still have a percent column and a dollar column. 30% still goes with the markup. 80% is or $80, I should say, is on the dollar selling price. What is changed now is just the two words. It's no longer on cost, it is on selling price, which means 100% has to go with the selling price. Does that mean the cost is now 130? Say no. It's 70. Perfect. Because the formula is cost plus markup equals selling price. So whatever this is plus this has to equal that. So it's 70 plus 30 equals 100. Now we are asked to find the dollar markup right here. So we need the markup row because that has what we're looking to find. What row does both of them? Selling price does. So the cost is the one we're not going to use. So we will cross multiply 30 times 80 divided by 100 is going to be $24. Correct? So this is where I was saying you got to be careful. You were saying just add it to 100 and then divide. That works if it's based on cost. What are you talking about? If you had the percent, divide with, if it was a 40% markup, you're saying just divide by 1.4 if you have the selling price?
Right, but
Yeah.
here you just do what 30% leaving is $24.
Exactly. But if you're going the other way, let me show you what I'm talking about. Well,
I didn't learn that way. So
well, yeah, like I said, as long as you're being very careful that that 1.4, the 140% is matching up with the number that you're using, you're okay. The only problem is when it's based on selling price, now it's all, those percents are messed up. That was the only reason I was saying that, is you got to be careful to make sure. As long as it's based on cost, then you're okay. So let's take a look. Let's see if we...
looking at it backwards, it's like a markdown.
Exactly. It's almost like you're starting at the selling price and working your way backwards. But, of course, you're still buying the stuff and you're paying a price for it, and you've got to mark it up from there. So let's say that you have items that cost you $120. Your markup, you want to maintain 40% on selling price. I want you to find the dollar markup. Cost plus markup equals selling price still. $120 goes into the cost, dollar cost. 40% is our markup. What else do we put in? $100 goes with selling price. 60% goes in for cost, because 60 plus 40 is 100. We're asked to find the dollar markup here. I don't need the selling price. We'll cross multiply and divide, which is going to give us $80 is the markup. Any questions? So let's say our cost is $240. Our selling price is $60. Find percent markup on selling price. Try that one in your notes quick. See what you come up with. Yeah, I spaced that out. I gave you the wrong number there. Selling price is $300, not $60. Thank you. Yeah, thank you. So we're going to fill in $240 cost, $300 selling price. And I'm going to put 100% here on the selling price because it is markup on selling price. What am I asked to find? Percent markup. So this number right here. Which means I have to know this number here. I have to know the number across from it. It is $60. Just 300 minus the 240. Because 240 plus 60 has to equal 300. So now I'm not going to need the cost. I'm going to cross multiply. 100 times 60 divided by 300 is 20, right? I think you divided by the 240. If you divided by 240, it would give you 25. You see it? It is time for a break, so let's go ahead and take a break. Let's come back at 6:31.